Hey, what's up, everybody? Hopefully everybody started off this week great, and everybody took advantage of that weekly watch list that was posted previously, and not just the one previously, but the ones before that as well. We've been knocking out these weekly watch lists, and a lot of them have been some solid runners. And again, totally up to you guys if you guys are taking these trades. You know, if you're following the levels, some of them did not hit, others did. Some to the top side, some to been flat. Pepsi is one of them, but nonetheless, there's still a lot of opportunity out there that, you know, some of these tickers have been mentioned in the weekly watch list in the past. So a lot of these tickers, again, I'm telling you, it's all about just following the price action and just kind of understanding what is happening with the market in general and how they're chosen, so we can, you know, be able to be profitable in any market condition. And that's my purpose. I guess the purpose is to give you something that's quality, and you guys are able to follow a good watch list, right? So hopefully some of you guys did. I know a couple people in some servers out there that are, you know, sending direct messages and, you know, being thankful that the weekly watch list is posted along with some of the content that we post for all the YouTube viewers out there. So please like and subscribe to the videos. If you're not, go ahead and just do it now. Don't hesitate, guys. Believe me. The goal and the purpose here is not always just to give you a signal, but also just to provide some good tools for you, so you can be able to, you know, make some day trades on your own. You don't have to depend on anybody else. Definitely be part of a group and, you know, trade with some good traders, trade along, you know, like-minded people. And gain as much knowledge and value as you potentially can. You know, don't put limits on your growth, don't put limits on yourself, and continue to keep on this process. You know, don't give up. Break those chains that, you know, a lot of people go through in financial life in general, and be the first one in your family to overcome something that most people can't in this market. But yeah, just wanted to give you guys some motivation and, you know, start off this new video and give you some good knowledge here. As you can see, I'm just setting up some random alerts, checking out some tickers and stuff. But I really wish I could do a live YouTube for you guys. Hopefully sometime next week, or, you know, later down the road, we can do like a live YouTube breakdown and be able to get a bunch of questions asked, and we're able to chart like on a Sunday as a team. So let me know if that's a good idea, guys. Comment in the down below on this video, or just in the next videos that you see. So let us know at Conservative Collectors as well. But anyways, I want to cover a topic that is rarely talked about, a topic that a lot of people are scared about. It's buying the dip. Okay, you guys have seen the recent videos that we've been posting, and it's all about supply and demand. It's about finding the ranges. It's about finding breakouts, weekly levels, 4-hour time frames. There's some videos on indicators here in the YouTube channel, the SMAs and the EMAs, crossovers. There's some real good videos out there, right? Good videos all across the board, and many YouTube channels out there as well. I'm not taking anything away from them. But also something that I rarely see is a video on buying the dip. Okay, you guys always see BTD, buy the dip, but in reality, a lot of traders are not buying the dip. Okay, just gonna keep it real with you guys. The terminology, the statement, the saying, the model in the stock market is buy low and sell high. All right, let me repeat that again. Buy low and sell high. All right, I hope you guys can understand what that truly means. All right, buy low, sell high. Okay, think about that for a minute. If you take a look at this chart, BA right now, okay, and somebody is telling you to buy low and sell high, here's my question to you. why aren't you buying low? Why aren't you in this? Okay, that's the biggest question here. Why aren't you in this trade? Okay, that's the next question. The reason behind it is because everybody's so scared to buy on major red candles. Okay, everyone is so scared because the saying out there, the fear that is put out by social media and all those platforms, it's when you buy the dip and it keeps on dipping, because you're buying the dip and then it continues to go lower, right? But you have it all wrong. The way that it's portrayed is wrong. Okay, and I'm sorry if I'm breaking somebody's little fame out there, but it's the truth. Okay, let me tell you why. And I'm gonna use BA as an example here. I'm using the chart just so I can show you. When buying the dip, there's a specific structure on the specific trade. On each individual trade, each type of trade, there is a structure. Okay, the structure is when you buy the dip, the risk is minimal. It has to be minimal. All right, you're losing less versus a breakout. A breakout can have a quick momentum pop to the top side, and then as soon as you enter, your the IV will increase super hard. It'll pump like, depending on the ticker, it can pump like $1.50, maybe $2, and come back right down to where it came from. Okay, meaning that it's going to give you a fake out, and next thing you know, you're stopping out of your trade in the red. Okay, so here what we have is minimal risk. Minimal risk because you're buying at a support. Okay, time frame is going to be everything. Time frame is going to be the strength of that dip buy for you. You're either going to buy at demand, you're going to buy at support, you're going to buy at the last support of that wick on the the previous candles or anything like that. You're going to buy at the bottom of the barrel. Okay, that's what this is. If you're buying at the bottom of the barrel, at the bottom of support, your stop loss is minimal. So does it have potential to keep on dipping? Yes. I'm not taking anything away from that. But what I'm trying to do is trying to put some perspective into how it should be looked at. Okay, if you're entering, let's just say, for instance, right here. Okay, I'm gonna use the 208 as a psychological number because we're right inside. Your stop loss for right here, you're using this wick. Look, okay, just to give you the perfect example, you're buying here at 208 on this red candle, on this dip, because technically it almost looks like a double bottom here the previous day, right? And then you're saying, well, if it drops down, my stop loss will still be here. So your risk from 208 to that 206, let's just say 206.70, compared to all this reward. All right, just to put it into perspective, your stop loss is so minimal because you're buying at the bottom of the support. Okay, there's no reason for anyone to come on here and get something engraved in their mind that is totally wrong when the dip keeps on dipping. Okay, this trade makes perfect sense. This trade is 100% risk management proof. Okay, whether you take the loss or the win, you managed a trade properly. You understood that this is the last of the support and you're gonna buy with confidence. You're gonna buy with proper execution, with knowing that if you take that loss, it's going to be very small, because now your reward is freaking huge. Look at the way that BA has been dropping heavily. Okay, first of all, why are you going to try to short something that's already been shorted from 278? It doesn't make any sense. And this is what I've been talking about in the past videos. If you guys go back where I talk about airlines, about jets, AAL, DAL, AAL, SAVE, SAVE, LUV, and I also included BA. that this sector is going to be the next sector that's going to be running. And if you guys traded it this week, you guys would have been green on all airlines. Okay. But again, I am not here to spoon feed you. It's totally up to you to set those alerts and be ready for these trades. If you don't see value in it, go back, go watch the previous videos. I guarantee you that you're going to sit there and you're going to say you missed out on a great opportunity that was provided for you, not spoon-fed. I did not come on here and tell you to buy to open a call position on so-and-so with X amount and this much percentage. I did not. I came in here and broke down something that has value, broke down something that can provide great potential for your rewards, but totally up to you. Okay, so just giving you some perspective on what buying the dip means. When it comes to supply and demand, this chart right here is already perfectly charted. I was personally in BA at these levels. My stop loss was right here. Unfortunately, my stop loss hit. Okay, I did not personally get back in today because this was not on my watch list for the day. I do have all my alerts. I have a dip buy alert right here at 215 if I get another one. Otherwise, I'm going long over that 217 again, and I'm still trading this, and I'm gonna try to load up on some more BA. So giving you the idea as to how your risk management can be, you still got to follow your rules no matter what happens. Okay, today I was focused on other tickers, so I did not get the opportunity to get into BA, and that's okay. That's okay if you guys missed out. But again, go back and get that knowledge. The knowledge is more valuable than taking a position. Okay, 100%. Because then when you get that knowledge, you're able to execute in the next few trades that are going to be provided based on buying the dip. Okay, and here I just wanted to give you a visual perspective on something that has a lot of value, and BA is one of the perfect charts that I can show you it. Now, buying the dip on something like BA is where do you know, what is the next move, right? What's going to happen here is that retail crew is going to come in, and you're going to see a lot of Discord servers. You're going to see a lot of TikTok videos and tweets and MySpace and Facebooks saying that BA had a nice green candle. It's going to be ready to go. So they're going to trade calls over this high of day. Okay, that's what they're going to do initially. This is your retail crew. The smart trader who's going to get to buy the dip is going to wait for a nice dip down here. Okay, so this is why you guys should be taking notes today. You want to be able to buy on that 50% retracement of that 4-hour candle, which is pretty huge. Okay, did you guys get that? Let me take this off. This is where you want to buy the dip. So you want to use 50% of this, and I'm just eyeballing it. Oop. Just gonna eyeball this around right here. You want to be able to buy the dip in this area. If BA does come rejecting, gets rejected from that level, and boom. Okay, here's your opportunity to buy the dip on BA. Okay, previous structures as well. It's holding that whole range. Here's your structure from where we broke down from. Okay, and it matches that like 50% retracement. So this is kind of the area where you want to buy the dip and then watch BA just do something like this. Or it legit may just go into that next level of 222 in the next trading session. So wherever it may be, look for the dip. It's better to find it down here, okay? If you don't want to trade that breakout, the breakout will have potential to have that quick pop. But again, we don't know where the markets are going into the next day. So all I can give you is to buy the dip level, okay? So that's what I'm doing now. My levels are right here at 215. I think at 215, I'm gonna pick up a starter position and then I'm gonna average down and I'm gonna just watch it go back up, or I might just get stopped out back at the bottom again. So just giving you an example on where you can potentially look for a dip, rather trying to find for a breakout of the top, because the move already happened to the top side. Already had a nice green move. Don't expect BA to keep on going unless some crazy news happens and we gap and go in the market tomorrow. Then for sure we're gonna keep on riding up. All right. And let me show you the perfect example as to what I mean when traders start looking for big green candles. All right. This is your retail crew. All right, let's look at Snap, for example. Snap, if you missed it, guys, it was on the weekly watch list. This is the area where I told you guys it was a resistance. And right here, if it broke this, it was going to hit these next levels. Look at this, hitting here, and we're halfway through there. We're most likely going to hit that probably in the next few trading sessions if Snap decides to keep on going. Snap is holding very well in this market. And let's just go look at this weekly time frame. And yet everybody else out there in the market is saying that they're bearish, okay? Why are stocks making all-time highs and breaking new levels and people are still saying we're bearish? It just doesn't make sense, okay? So just to put this in perspective, I'm gonna go on let's do the 1 hour time frame, and just to show you, I'm gonna pretend like this day is not here. And I'm gonna show you this, okay? Snap here held a great level. It went as high as 76.33. So from the open, from 72.30, it went as high as 76.30. A lot of traders were waiting out there, making their watch list and saying, hey, Snap had a nice green candle. Let's trade this long over the high. Well, it doesn't make sense to trade it over the high. What makes sense is to find a dip buy level. And look at this old support right here. The level where we broke out from was right here at the 73.60. The top of it is around that 74. All right, look at all these candle bodies right there. Look at the structure that is built. And now let's look at the results. Look what happened. It dropped down right at pre-market. This is a pre-market candle, okay? It hit that perfectly level right there at 74. And then on a smaller time frame, let me just show you the 15. Look what happened. Naturally, when a stock trends and hits those targets, it pulls back. It does your retest, and next thing you know, we're breaking these highs. Look where we stalled at. We stalled right at the high where a lot of the retail crew came in and they took it high and they probably took profit right here. The other guys have been in this position since the previous day and they've been holding. They loaded right here some more at the 74 and they took it all the way up, and they're probably still in this trade. Okay, so just giving you the example on something that can potentially happen on BA, and I'm showing you here the perfect example on how it happened already. Okay, so here is the perfect example on Snap and BA on how to buy the dip and what to expect. Okay, so this was about 50% of its retracement from the previous day. That was the level where it got bought up. That is the level where you have support on this 4 hour time frame, and it's a perfect trade. Okay, so this is a buy the dip opportunity for you guys that you can learn from. It held a lot of strength the previous day. The market was nice and green today. Again, I'm not going to give you a recap on the market, but definitely those who were trading today know that it was a solid green day all across the board. Now, let me show you two other tickers that were pretty amazing, and how much strength the bigger time frames have. Let's talk about Disney. Okay, so let me just clear this chart real quick, just so you guys can see everything. Here is your Disney chart. All right, first of all, I'm going to zoom in right here. I'm going to zoom in on the 15 just so you guys can see some. And yesterday, there was a catalyst that came out on Disney right here, okay? I want to point this out because some of you guys already saw Disney that it tanked, right? Well, what naturally happens when a catalyst comes out, it usually happens, if you pay attention, it happens at supply and demand. It's going to happen at one of those two levels. And if you have these levels, then for sure, it's probably going to make sense for you. If you don't have them, then it probably won't make sense. So supply and demand is one of the best things you can have out there. If you don't understand it, please go back and watch the previous videos on how to chart supply and demand. It's definitely on there, and you guys can, take in a lot of knowledge. So here we have Disney with the news, all right? This huge red candle. Now, this buying the dip, okay? For this one, I like to call it the falling knife. Okay, you're catching a falling knife. All right, picture this as an aggressive falling knife, and you're legit just buying here at the bottom. When do you buy a dip when it's a falling knife? First of all, the falling knife has to make sense. How strong is that support? Okay, if it's a support from a previous day, it's probably not that strong. If it's a support from multiple days, it's probably strong. If it's a support from a weekly standpoint, from a weekly time frame, then for sure it's going to give you an amazing level bounce. Check this out. Let's look at this weekly time frame. Let me just show you right here. Here's your 172. Okay, this is where I had my alerts. The candle body's right there. Here's your wicks, the 170. And then here's the bottom of this wick and this candle body, which is like your 168, okay? So I already had these levels, but I'm gonna show you now what I did. Look at this, okay? When I got my alert initially yesterday at this 172 area, I automatically stopped what I was doing, and I knew that this was a support. I had watched Disney that same day, and I watched it go all the way to like 180, 150, 182. Next thing I know, I'm sitting on my phone, right? I'm looking at my phone, and I get this alert for Disney at 172. My automatic reaction is to come and check out what is happening with Disney. I open up the chart right away. I pick up my phone, and I open up my order to buy to already start buying, because that was my alert for a major support, a support on a weekly time frame, a 4-hour time frame that has been touched multiple times. Look at this. I don't just coincidentally have random alerts in these charts. I have them in for a reason, because I want to know what's going on in the market. More than likely, if you guys are trading something long and you're wondering if I don't know about it, I probably do, because I have an alert. That's how important it is for us as traders that do this full time to make sure that we're up to date on a lot of these things, where the market is going in general, what the sentiment is on specific sectors and all that, okay? So here, when my reaction, when I got the alert, my initial reaction again was to buy the dip. I didn't care how aggressive the selling was. As soon as my alert hit, I caught this falling knife, and I knew that it was going to be a manipulated candle. I knew that it was going to be some type of catalyst. So I automatically went on my news feed. I typed up Disney while I was in the trade, and I said, oh, okay, it's not bad news. It may look bad, but it's not that bad, okay? It's all a matter of how the perspective that you may have on something that you believe in. I truly believe that Disney's a great company, and I trust that in the future, it may have something great. But I also trust the charts that they are at a nice dip buy opportunity for us to, be able to buy the dip with confidence, with or without that huge red candle, okay? Like I said, I'm sure a lot of people were already thinking short it, because they automatically see this huge bearish candle. But what you fail to realize is that this thing hit a nice support. And when I bought this thing right here at this 170, I ended up taking profit right here at this 173. I came out with some nice profits. So again, guys, I just want to show you the importance and the value on how to buy the dip on something, okay? There's a difference. When something is trending, you want to be able to buy the dip the next day. If you missed it, it's okay. Go back in, buy the dip where it has more value. Don't come into the market trying to, buy tops, because next thing you know, you're going to get stopped out, okay? This is all supply and demand trading, all of it with no indicators, all of it with just initial reaction and confidence and trusting that the support is there. If you're buying at the support, your stop loss is legit right below, and look at your reward that can potentially push all the way back to the top. Imagine if you would have bought call down here at 170, next thing you know, the next few trading sessions, we're back at like 180. You're going to sit back. You're going to come to this video and you're going to wonder why you never bought Disney. Okay. I'm not saying it's going to go to 180. I'm just giving you a hypothetical perspective here. So, don't take this as a call out, not financial advice. Okay. It's just me drawing some little circles and some lines here and just giving some opinions. That's all it is. Okay. So, so yeah, that is kind of the buy the dip video. Okay. Now let me show you something else too. I want to bring up Facebook because a lot of people were looking at Facebook. Now, what I want to show you before I show you the bigger time frames and before I clear my charts, okay, I actually planned for this trade for the next day. I actually wanted to trade this today. I wanted to get a piece of Facebook action, okay? This was my initial plan. Go along over this little resistance right here, that 360. 1, 2, 3 times, 4 with this pre-market, 5 with the previous day rejection, okay? Your support was right here. It was a little bit of support. It wasn't a lot, okay? And then you get that pre-market. That pre-market gave you a nice little base. And then the previous day, it had some nice consolidation at that specific level as well. So I technically had these two blue lines where I can follow. I had this top blue line as a target. I had that yellow box as a target. I had this as a target. So all I'm doing is that mentality of a gap fill and then potentially hitting this base up here. And then if it broke down to the bottom, I would initially take profit right here around the 350. Unfortunately, that all played out pre-market. And I did not play the puts right here at this 350. Now, why didn't I play puts? The reason for this was because the news was already bad. And I personally did not want to trade this anymore to the downside just because I already saw the move already play out at the pre-market. And I didn't want to get caught shorting here and then get stopped out pretty aggressively. So it automatically went off my watch list. I didn't care for it. Now, let's look at the bigger time frame. Look at the levels that it hit. Okay, it actually broke that 350. So once it broke that 350, I initially knew it was going to come hit this wick, hit that 348. I was prepared for all of this, but this was my trade plan here. Okay, and then here, more support at this 344, and then more support down here at this little base, which is this 341, and that's kind of initially where we slowed down at. How do I know if it slowed down? You go on the 15 and you see the structure that's being built here. So now the demand is coming in. Whether we continue to the top side or downside, I don't know, but I don't care for it because my whole game plan on this was already played out right at the pre-market, and it broke all those levels. So definitely it would have been a great trade to the put side. Unfortunately, again, I did not want to trade that. And I did not want to catch this falling knife. The difference between this one and Disney is that this one had a nice base. It was already dropping, so this looked like a drop-based drop. And I did not want to mess with that on the put side. And then the news catalyst was more of an aggressive one. And it was a negative news that actually can affect it for investors. So I did not want to partake in that, okay? I know a lot of people probably did trade it. I'm assuming a lot of people did grab puts. Great job if you did. Amazing trade. But just again, you know, to show you the difference between a falling knife and something where you can buy the dip on something that's already trending and something that you just technically just stay away from, guys. All right. You don't always have to trade everything. Not every trade is going to be a great trade. Okay. Not every trade is going to be the right one for you. And not every dip is going to be the perfect dip. So there's multiple things that you got to look for in order to buy some dips in the market and continue to do so. So again, definitely use this. Now, let me show you one more thing. And I want to show you how important it is to get those like pre-market levels and then those previous high days or all that stuff, right? So I want to show you V because I took this trade for the call sign. And what I'm going to show you here is probably going to be good value for tomorrow. So if you guys watch this video, please look out for V. Okay. Here, I want to show you the resistance right here at this 222 previous day high. And almost on that pre-market, this one I really don't care for. It really just doesn't make sense for me. It's mainly this piece right here because this is where we got rejected. This is where we got bought up and stopped at. This was a resistance right here as well. And then this was a support. So the 222 psychologically was a good entry for a call play with my next target on the base up here where we consolidated. Let me just take that off. So right here, okay, that 224 to that 225 area was a nice level of target. And look how well it hit. Now, what you want to do is when you see something like this, your first reaction is your breakout level. Your breakout level remains to be a breakout because it once was resistance. So you remember that this was resistance, okay? So now here on the next day, we end up breaking above. What naturally happens when something breaks out of a level? You retest. Look what happened here. On that first green candle, initially it brought it all the way up to that 223.30. So you could have entered at 222 and caught a whole move, $1.30, and took profit. Could have done it again. It broke right here, right? Came down to 22. Look at that. It did the same thing again. 223.40, the same level, okay? So you had enough opportunity to test this 222 and get in for the trade using just that previous breakout level, okay? So for tomorrow, how do you enter this trade? All right, well, let's go see. Let's look at the hour chart and let's prepare. We have a nice downtrend. We already demand. Let me zoom out some more so you guys can see what I'm talking about. Look at this support here. This 220 level is almost like a double bottom right here on a channel down. It's basically giving you a pattern inside a pattern. The pattern here is the double bottom inside a downtrend channel that has potential to keep on breaking to the top side. So this can definitely hit this trend line at 224, where it's going to get a lot of attention from retail crew, and they're going to want to take it long over that 225 area, where it's going to hit that break above that trend line. And next thing you know, what's going to happen to V is going to pop up. It's going to come and retest that same level, that 225, or even the 224. And then from there, continue to start trending back up, okay? That's how you look for a reversal. The reversal, because it's going to be all eyes on me from retail crew once we have that solid green candle. And then all the other guys who are going to come in who didn't catch that trade, they're going to come in and buy the dip around 224 if we do continue to break on up. Okay, so use this level here as a dip buy, the 222. You want to use the 223 and the 224 for continuation to the top side. It's going to continue 225 and create that trend change, create that breakout to the top. And then we're going to be around the 235. And then you guys are going to thank me later. Comment in the down in the bottom comments and let me know if you took the trade all the way to the top. So V, also, if you're looking at V, please take a look at MA, okay? So just want to give you guys that quick breakdown on V, and also just explain to you the buying the dip strategy that you guys can apply to your trading. Again, if this does not make any sense, please guys, let me know. I'll definitely make another one on this if you guys want more information. But again, everything is here for you guys. Go take a look at all the other videos and see how we trade these things. All right, it's all about supply and demand, guys. Buy at support, sell at resistance. If it breaks resistance, buy the breakout and sell into that momentum trade. Okay, so I hope this helps you guys. I hope this tool is something that can help you for your trading journey, and you guys continue to support the YouTube channel. Let us know if you guys have any ideas. We'll definitely come out with some more educational content. So you guys have a great week. Please be patient. Let the setups come to you guys. Don't go heavy on your positions. If you do, be confident 100%, because I will not stop you from growing. I'm sure some of you guys have potential, but you're too scared to keep on pushing forward. So please do so. Push yourselves to new limits every day and continue to grow. That's the whole point of this trading journey, right? It's not to stay stagnant, but to continue to keep on growing. So yeah, I'll leave you guys with that. Hopefully you guys enjoyed this video, and by the end of this, you guys should be able to buy the dip. All right, I'll see you guys in the chats.